All right, let's take a look at the market. Today is November 10th, 2013. Hopes everybody is enjoying the weekend. Let's take a look at the Dow Jones 30. The Dow Jones 30 made an all-time high once again on Friday. It actually made two new all-time high last week. One is on Wednesday, and then followed by a big down day, and then on Friday. Both of these times, the Dow Jones Transportation did not confirm that, so we have a non-confirmation from the Dow theory. Although, a lot of people might say, well, how does this work? Well, the thing is, we have to remind ourselves that the market never accommodates the masses. And if everybody is sitting there, right next to the exit and getting ready to bail, the market is not going to be that accommodating. And that's the reason why we probably got that Friday bounce here, because a lot of these people, got spooked out on Thursday. And then, basically, a lot of people just came back in. The smart money just kind of bought that dip. And right now, we're still looking at a non-confirmed, new all-time high. And we have seen this before in the past. If you've been, following the market long enough, you have seen these kind of, what I call shenanigan, that is a little bit of a fake. But if we look at the internal market, you can see there are some internal weakness developing. And also, you look at the weekly chart here, we basically have 5 consecutive up weeks on the Dow Industrial. Now, it doesn't mean that we cannot get the 6, because you can see here's the 6 consecutive week here. Also, the other thing is also bumping up to this, upper trend line on this price channel here. But again, who's to say that this is not just a little bull flag and for it to break out on and possibly get up to this, 16,000. So anything is possible. It's just that we have to look at the market as a whole and then be a little bit of cautious and be aware of the possibility and also the probability. So the probability for us to continue to move higher is getting slimmer and slimmer as we progress to these higher level with weaker market breadth. So one just have to be cautious on that. And right now, we're basically looking for possibly a pullback. If it's going to come back and pull back, below this 78.66 Fibonacci retracement, somewhere around the 15,550. But the interesting thing to note is the diamond here. If we look at the diamond, right, although we did not get an inside day here on the diamond, but we did get it on the indexes. On the index, the Dow Jones 30, because right here is 155.68 is the low, and here is 155.59. So definitely the Friday's low is lower than the previous day low. So we did not get a inside day. But if you look at it, similarly, if we come up and take a look at the 30-minute here, we're basically looking for this to get back up above this, this Thursday intraday high here, somewhere around the 157.80. If we could break that, then most likely it probably will march toward that 159 level, which would get up to, probably get up to this 160. And that's when we start probably hearing a lot of the, talking head be talking about that's, 16,000 level and that sort of thing. So those are some of the level to keep an eye on is, breaking about this 158. This 157.80, and if you can't do that, once you break below, the Friday's low, then, or even if you can't hold the Thursday low, then look for the possibility of it coming back down to this 155 level here, essentially this particular support level, these level here. Maybe that's would be the first level of support is somewhere around this 155. And if you can hold this, that's essentially, the 78.6 extension. I mean, the 78.6 retracement level, and also close to the 20 EMA. And if you can hold that, we're basically looking for it come back down to this below that 154 area, and then possibly, maybe get to this level here as potential. Next level of support here. So that's would be on the diamond or the Dow Jones. And then if we look at the S&P 500, the S&P 500 also closed, I believe, to a new all-time high. The close previous one is 1770.49. That was on Wednesday. And here we close at 1770.61. So just a few pennies, like 20 cents or less than 20 cents above that, the previous high. And that's the only index actually close along with the Dow Jones 30 on Friday to a new all-time high here. So if we take a look at here, you can see that once again, we probably see some resistance up here. You have to break above to this, the previous day high, which is somewhere around the 1774.54. If we could break through that, essentially it's coming up to the 1780, this upper trend line here, and then it might be marching, up to maybe people would be talking about the 1800 level here. Then it's just like looking at the weekly. Again, you can see that's 5 consecutive up week. So the probability for it to continue to put in another up week is getting slimmer. There are here's the time that actually got 7 consecutive week. 2, 4, 6, 7. And here's the 4, and here's a 4. So you can see that here's another 6, but most of the time it's couple up week, couple down week. You can kind of see that. Here 3, 2. So and then here's the 4, 1, 1, and then 2, 1. So with this getting up on the 5 consecutive up week, certainly we have to be a little bit cautious. Also, it's bumping up on a upper trend line resistance. Now, anything is possible. It's just because the chart say it's bumping up and the probability is low doesn't mean it's not possible to move up. So it's only a probability, but it's not a certainty, right? So this could be continue to move up and maybe make a little break to the 1800 level or somewhere close to that before it come down, to tag this 147 extension near the 1790. And if we take a look at the spider, the ETF for the S&P 500, you could also see, that it is coming up and bumping against this, this 127 extension here. And if we take a look at the 30-minute chart here, we can see that need to get up and make a new high as well, get up above that that Thursday high, that intraday high, somewhere around the 177.64. And if you can't do that, if we come back and break below, basically somewhere around these level here, maybe there's some support down here, somewhere around the 175.33, 175 area, that 175.30. And if we break that, then we'll probably be looking at this level here. Matter of fact, I think I put out a chart on that to say watch this level a while back. So you can see that there could be some support down here at that 173.97, so somewhere around that 174. Okay, so that's the spider here. If we come down to that 174, so essentially coming back down to this 173.39 to this breakout, on this Fibonacci retracement, and right now essentially riding off and bouncing off the 20 EMA. So we're going to see how it's going to react next week to see could it be able to take out that Thursday high, intraday high, or break below the Thursday low. I think that would be the telltale of where the market might be heading. And then the nasdaq 100, the nasdaq 100 is also kind of recover a little bit and put in the inside day on Friday. It's a little bit of a normal 2 week up, 2 week down. After 4 consecutive week up, we got a pullback week, and then 2 week up, 2 week down. So right now it's trying to get up to that 141 extension, but it kind of failed to do that. It's putting up a little bit of an inside day here. Once again, we're going to see, can it take out the Thursday high of the 33.89 or the Thursday low 33.18. So we're going to see how that break between this inside, this basically this encapsulated or engulfing candle of that inside day. And if we look at the 30-minute chart here, so right now essentially we're looking for a little resistance here at that somewhere around this what is this 33.68, 33.70 level. So if we could break through that and try to come up to this, here's this previous all-time high, I believe, on the intraday. Let's say 34.08. So if we get up to that 34.08, then we might see it to come up and try to tag this 141 extension. This 147 extension. No, it's 141. Sorry about that. It's 141 34.24. So, but if it breaks below this particular support, then we'll probably see it come down and try to fill this gap down at the 3,300. So if we look at the Q, the ETF for the NASDAQ 100, you can see that we are essentially looking at the similar level, down here somewhere around the 81.67, 81.66, and come down to this 80.80, somewhere around there. So again, we need to see it. Could it take out this high here, somewhere around the 83.48? Okay, then basically we're looking for it to come back and retrace up to this 141 extension of 84, close to 84, 83, 88. And then finally, we're looking at the Russell 2000. The Russell 2000 kind of pulled back quite a bit, but again, it also put in an inside day on Friday. So right now, we're basically looking for it to see could it bounce off of this level here, because there seems to be found a little bit of support down here, essentially, these level here. And if we could bounce up and take out the, this particular high here on the Wednesday intraday high, essentially, then we might be able to see it to try to make another stab at the all-time high here, somewhere around this 1120, this 1122.64. And we'll look at the, the Russell ETF. You can see that the, right here, we're basically looking at this somewhere around the 110. And 16. So right now here's the intraday high somewhere around the 111.62 or this 111.48. So somewhere around there. Then the support is essentially down here somewhere around the 107.17. So essentially that's what we are looking at. And right now it seems like although the market is internally, it does show some kind of weakness, and we're getting some non-confirmation here. We still have to respect what the market is doing, and definitely would not try to do too much of an aggressive short until the market have get us a clear signal that it is reversing. It could be just a little bit of a shaking the tree a little bit, and until we get to we have a lot of the market participant to be complacent and just buy every dip or just buy at all costs, then we be seeing the market might give us a sign that it is ready to sneak back down, because we don't see these kind of dramatic sell-off at the early phase. We see these kind of big sell-off near the climatic, the capitulation phase. We need to get people to market participants to come in and push this market up like there's no tomorrow, that they have to buy. They cannot miss this train. And we haven't seen that yet. Or we will frustrate, the market will frustrate a lot of participants by slowly grind down and get the people disbelieve that the market is going down. So they just hold on. And then every other day they might see their little equity curve go down a little bit, but not enough to to tell them to get out, but enough to make a little dent slowly until it starts to pile up. Then we get into the scary phase, the fear phase, and then after that, then we might see some capitulation. But right now we haven't gone to that phase yet. So we'll probably get a little bit pullback because too many people are expecting some kind of pullback. And again, the market will never accommodate the obvious. So if everybody is expecting something, the market have a tendency to do the opposite. So good luck to your trading on your trading